welcome back to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Last year, this time, we had just wrapped up a week at PDAC. It's been a challenging year and an exciting time to be in the small cap space as well, and more specifically, the gold space. We are excited to have back with us today Anaconda Mining. Anaconda is a gold mining development and exploration company focused in Atlantic Canada. They operate a mining and milling operation in the prolific Baie Verte mining district of Newfoundland. Anaconda trades on the TSX on the big board under the symbol ANX. When they presented with us in October of 2020, they were trading around 54 cents. They are now trading in the 80-cent range. They recently announced a significant increase at the Goldboro Gold Project at a record cash flows of $14.1 million for 2020. Here with us today for an update is the CEO and President, Kevin Bullock, and joining him is their CFO, Robert Dufour. Welcome, gentlemen, and please start when you're ready, and we'll have plenty of questions for you later, I'm sure. Go ahead, Kevin.
Thanks very much, Paul, for having us. I'll share my screen and we'll get going.
Perfect.
Great. So, as Paul said, we're busy in Atlantic Canada, and we're quite a unique company. Some of you may know us that we have production and cash flow, but we also have aggressive exploration and growth plans. We will be talking about forward-looking statements, and these can be found on this presentation, which is on the website. Our current production is between 15 and 20,000 ounces a year over the last 10 years. We do between 18 and 19 over the last few years, and we've always made money at different prices, but just recently, because of last couple of years, because of the gold price and some efficiencies that we've made at the mine, we're actually be able to build up a strong treasury and a robust balance sheet. And we continue with our cash flow generation at the mine Argyle. We have three core assets. We have the Point Rousse operation, which is the producer in Newfoundland. We have the Goldboro Gold Project, which we'll get into, which is the latest news, the exciting news for the company of an increased resource. And we have Tilt Cove, which is an exploration property in Newfoundland, about 40 kilometers east of our producing mill, where we're exploring for lookalikes to the Nugget Pond, which produced historically at close to 10 grams per ton. So busy on all fronts. We have an experienced financial and mining team that has driven the change and the growth in this company. Myself, I've been doing this, started mining underground in the mid-'80s and worked my way up through the operations and into the business end of mining, and I've been running companies for about 20, 25 years now. Some of my past experiences were taking part of a team that took IM Gold public in the 90s, and Kirkland Lake Gold and Volta Resources, which was acquired by B2 Gold in 2012, and I'm still a director of the B2 Gold Corporation. I'll turn it over to Rob now to introduce himself and take you through the operations that we did well at last year.
Thanks, Kevin. I just want to confirm what slide should be showing right now?
5.
Okay, I'm just seeing the title slide. That's why I just wanted to.
Oh, it's not moving at all?
No.
Oh my goodness.
While you're kind of looking through that, I'll introduce myself. So myself, I joined the company about 3 years ago. Chartered accountant by background, but my career has all been mine operations and mine development, particularly in precious metals, starting with companies like Northgate Minerals and Orico Gold. I led for 3 years in the Bendigo gold fields, working with mine sites down there, and was appointed after that CFO of Crocodile Gold. Crocodile Gold was a 200,000 ounce producer, had its challenges at the time, but we were able to make that quite profitable, restructure the balance sheet, clean it all up, and eventually attracted the attention of Lucas Lendine's New Market Gold vehicle. And we put those together, created New Market Gold, became CFO there, up until the point that we sold it to Kirkland Lake. And that was obviously a very transformative transaction. And much like Kevin saw with Anaconda, a really interesting group of assets that really with the right focus could be something special. It was probably, on its own, 18 to 19,000 ounces. It's hard to really get excited about, probably should be a private company. But as a vehicle, an engine for growth, it becomes very powerful. And that's what will show was led to the game-changing results at Goldboro that we have. I think, right?
Are we seeing it now, Rob?
The title page. It looks like it's in the, yeah, okay. Okay, now we're moving.
Perfect.
There we go.
Sorry about that, everybody.
So, I'll highlight a few things. As junior, we're in pretty good position. We're well funded, almost $50 million of cash in the bank, 160 million shares outstanding on the TSS on the big board. We used to have a big kind of a warrant overhang. There was almost 17 million warrants, but we were able to clear all those in January, virtually all of them in January. And if in full, had them exercised, it's about 5.6 million left, but those all drop off this year. So there's some inbuilt financing into what is already a strong position. And that's where, Point Roost, we'll talk about, that free cash flow generation helps. Gold's come off a little bit, but, as a company, we don't have to worry too much about that because we're generating free cash flow. We don't have to go dilute shareholders with cheap stock. And so last year, like I said, 18 to 19,000 ounces a year. We generated 41.5 million in revenue. That was a record for us, and resulted in operating cash flow of 14.1 million. And remember, operating cash flow, that's after corporate, that's after overhead. So that's dollars that we can then turn and put into growth. And you'll see the results of that. This year, looking to do similar amount, 18 to 19,000 ounces a year. Operating cash costs US around 11.25, all in cash costs US around 14.50. So again, notwithstanding gold's come off a little bit, we're still generating free cash flow, and we have good upside when gold, to me, I'll say when gold does go back up. We ran the mineral reserve for our Point Roost, where we're mining at the Argyle pit, at a Canadian dollar gold price of $1,900, and it's very robust at that price. And of course, we've been selling quite a bit higher than that. Again, notwithstanding the fact gold's come off, and it's still robust at a lower gold price. So we're well situated for this year, well funded. And, we realized years ago that we needed growth, and we needed to get to at least 150,000 ounces. And that's the start. We know we got to go beyond that. And the next piece of that puzzle is Goldboro. And this is the game changer for the company. So I'll turn it over to Kevin.
Yeah, thanks very much, Rob. I think the last time we spoke, Paul, we were talking about something that we thought was going to be much bigger and open pittable, and sure enough, that's what turned out. And we put a press release out not long ago, a couple of weeks ago, about the new resource, which is a significant expansion from what we were thinking before. The Goldboro project is located on the eastern extension of a series of deposits that are held by Atlantic Gold. Atlantic Gold was acquired by St. Barbara 2 years ago for over $700 million. And we're the most eastern deposit on that string of deposits. On the right side of the screen, you can see the outline of the pits. It would be one long pit over 2 kilometers long, but for the lake and river that run through it that break it up into 2 pits. Very large. This is the outline of what the pit surface would look like when it's mined out. A lot of ounces in the ground here, and we've grown considerably. We started out looking at an underground opportunity, which would be to go after the red zones within the bottom left picture here. Those are the high-grade veins that we started looking at a few years back and drilling, until the point that we had enough infill drilling and the modeling done right to understand that the mineralization actually continues in and around those systems and in between those systems in the host rock. And that changed the whole way we look at this deposit, in that we were no longer going to go underground to start with to go and get these high-grade veins. We actually can do an open pit. And we were able to, with 45,000 meters of infill drilling and remodeling, come up with well over 1 million ounces. As a matter of fact, almost 1.1 million ounces of gold at 2.86 grams per ton. That's actually mineable, constrained within the pits, which are constrained only to measured and indicated. We chose not to add inferred. We didn't want to increase anything beyond a reasonable amount, because we're carrying out a full definitive feasibility study by the end of the year that's only allowed to use measured and indicated. So we wanted to keep it consistent. So there's a lot of room for growth. You can see on the right side here, we're looking down the plunge of the system, the mineralization and the veins that fill these pits. It's turned into something that's over 2 kilometers long now, so quite a robust project moving forward. Looking at the ounces, one of the most important things for us that happened was the feasibility level metallurgical testing, which showed that the lower grade material still had a great recovery over 90%, and that at a 0.44 gram per ton cutoff for the open pit, we were able to get 96% recovery overall in our feasibility level testing. So it's allowed us to have pits that have well over 10 million tons at 2.86 grams per ton for about 1.1 million ounces. Just to put that in perspective, what we're looking at is something that, you know, could generate 100,000 ounces a year for well over 10 years when it turns into a reserve. But it doesn't stop there. There's a lot of underground and outside of the pit resources, which amount for another 1.6 million ounces. So it's quite a robust project, 2.75 million ounces in all categories and still growing. This is a very telling slide in that looking at the long section, which is looking at the direction north from in the ground, you can see that the western pit goes down about 250 meters deep, and the eastern pit extends down to about almost 200 meters. There's a little bite in the bottom of the eastern pit. That's not because the mineralization stops there. It's because it's inferred mineralization. It's not drilled at a density enough to make it into the pit. The same as the bite in the west pit. So there's a lot of room still for expansion here. The mineralization between the two open pits is not lost because of the lake and river that separates them. It'll just have to be sought from underground workings from a ramp system off the pits well into the mine life later. The opportunities that we have here for expansion can be seen on the right side of this slide. This is looking at cross sections looking to the west. And in the western pit, you can see that we get as much mineralization as we can with the open pit on the limbs and the noses. Whereas if you look at a cross section through the eastern pit, we aren't getting the resources that are to the north, which form this bite in the pit. That's only because it's not drilled densely enough to become measured and indicated yet. It's currently inferred. So those over time will be infilled and add additional potential to this. The upside to all of this on a property level is west of the western pit, there's another 1.5 kilometers of mineralization that we know exists with limited drilling and geology work that we've done in the area, all the way to a past producing mine called Dolliver Mountain. So there's another 1.5 kilometers of opening whereby we'll go in and drill at some point. And that leaves room for even a third pit should it pan out. So there's a lot of upside to this immediately at depth, in between, and to the west. So we look forward to continuing the process of upgrading resources and growing this resource while we do a definitive feasibility study on what we know now. So the next step for us, the next steps are to continue with our permitting and environmental baseline studies. Obviously, this is now a larger footprint than we first imagined. So we're doing a lot of work on that. We've chosen to complete a preliminary economic assessment based on the new resource because it was such a change, 100% growth, over 1,000% growth in open pittable ounces. And we needed to put some sort of economics around it now while we work towards the feasibility study. And that'll be out next month, showing from a PEA level, a preliminary economic assessment level, what this new resource will look like financially. At or about the same time as we hand in our definitive feasibility study, which will be at the end of the year, we'll be handing in our EARD, which is our Environment Assessment Registration document. And then it's a 6 to 18 month timeframe to get final permits to start construction. For a project of our size, it's probably the latter, it's 18 months. So at the end of the year, we'll submit that, and then it'll be an 18-month process to get permits and start construction. So we're quite excited about this possibly being the next mine in the East Coast. Getting back to Newfoundland, just to look at our situation there, Rob took you through the financials. And now Rob can take you through the infrastructure that's there, and then I'll get into what the Tilt Cove means to that, leveraging that. Rob?
Yeah, thanks, Kevin. Many of you may know Newfoundland's become quite the hotspot in terms of exploration, and we certainly agree that it's tremendously prospective, and we think we're uniquely positioned on that front. One is our Cove Gold Project, which we think is second to none in terms of upside and discovery potential, and Kevin will touch on that. But what makes us particularly unique is the fact we have the infrastructure in place. We have an operating mill. We have tailings capacity, which is the most valuable. So we can fast track from discovery to production, and we've done that for years and know how to do it. And here's a great picture of our site and that infrastructure. And of course, the most valuable thing is that big hole in the middle. That's a in-pit tailings facility. Environmentally, there is nothing better you can have. And at our current throughput rate, that has well over 10 years of capacity. So anything that we find in the area, we can leverage this infrastructure. I mean, to build that would be tens and tens and tens of millions of dollars. But it would take you 3 to 4 years just to permit in terms of timeline. So that is extremely valuable. And with Point Bruce, and the questions is always, well, how much reserves do you have in front of you? What's your life of mine? And we've been very aggressive on extending that, and we've got some good things coming. So I'll let Kevin touch on those.
Great, thanks, Rob. So the actual infrastructure and the Pine Cove pit, which is now the fully permitted tailings, are on the left side of this, on the west side of this map. We're currently mining from Argyle, as Rob touched on earlier. However, we've discovered an extension to the Stoggertite deposit that was mined in the past called Zone 278, or the extension to Stoggertite. And the initial drilling has shown some great results, 5.5 grams over 20 meters, 4.5 over 15, and so on. And we're just finalizing a program of infill drilling and extensional drilling and updating our models. And we believe that this will be the next mine after Argyle at the Point Bruce project. So we're quite excited about continuing with that and extending the mine life at Point Bruce. For the future, looking at Tilt Cove, our exploration project, which is about 45 kilometers to the east of the only producing gold mine mill on the island, which we happen to own, is the area that we've acquired and assembled around the past producing Nugget Pond mine. Nugget Pond operated at an average grade, diluted grade of almost 10 grams per ton. And we're looking for similarities along this banded iron formation outlined in red and purple, and cross-cutting structures which bring the mineralized fluids, and how Nugget Pond was found. As a matter of fact, all northern Newfoundland gold mines have been found using geochemistry, so gold in soils and gold in tills. And you can see the polygons around to the southeast and northwest of Nugget Pond mine. And we're looking along this banded iron formation for similarities. And you can see them to the northeast, these other polygons of gold in tills and gold in soils that surround this horizon. So we've developed quite a few targets throughout there. One of the ones we've just finished drilling at is called Growler. This is a newly discovered area on the Nugget Pond horizon, freshly mapped. Nugget Pond horizon didn't exist in other maps until now. And we've identified through channel sampling, chip sampling, and grab sampling mineralization over an area that's about 500 meters long. And you can see the rust-colored staining of mineralization on the ground that we see there. And we finished an 8-hole program there, eight diamond drill holes, and are awaiting assay results. We do not have any back yet. So we think that, we're on track for what we've promised. We want to grow to 150,000 ounce a year producer through aggressive growth, development, exploration. And we feel with the way that Goldboro is turning out to be such a robust project, that puts us well on our way to achieving that goal, and creates an optimal entry point for investors, knowing what we're moving towards. So that's basically an overview of where we're at now, and quite happy that we've been able to come back and tell you that we did grow this to a much larger deposit and much more open-pittable ounces for sure.
Well, thank you, Kevin. Thank you, Rob. That was great. So happy to have you come back and update everyone. Clearly, there's a lot of questions about Goldboro, so we'll get right into it. Don asked, can you provide some detail around the 3,500 meter drill program? For example, how much is the program going to cost? And what's a reasonable expectation in terms of increase of the measured and indicated, if you can say?
So we have a history of conversion that's around 70%. So in other words, all our inferred resources, when we do drill it tight enough, we average at 70 to 75% conversion into measured and indicated. So right now that 3,500 meter program is to drill off the incidental inferred that fell into the constrained measured and indicated pit, and to develop, and that's 90,000 ounces of inferred. So at our historic rates, we would expect that to be somewhere around, some 50 to 60,000 ounces added to within the pit already that can be used in our feasibility, because you can't use inferred ounces. Rob, do you want to comment on the cost of that program?
Yeah, the cost will be around, it's around 550 to 600,000 dollars Canadian, and that's fully funded. And I think one of the things, with Goldboro, it's tremendously efficient in terms of drilling. Some people when we acquired this, it was 850,000 ounces. There's now 2.75. Our cost of discovery, if you add up all the exploration dollars we spent, is less than $4.50 Canadian per ounce.
Wow.
So very efficient, excellent use of capital.
Great. So another question from Don. The latest round of drilling at Tilt Cove resulted in some copper showings. What will you need to see before you commit some serious drilling to this area?
Yeah, we're a gold company and we'll continue to be a gold company. We're not at the point that we wish to get into something that allows us to have to make concentrates and deliver concentrates and smelter contracts. So we want to stay with pouring gold bars. We find that's what we're best at. So we need to look for a gold dominant deposit. The drilling that we did do, the first target that we announced, was more of a copper dominant. So we will look into that and see what it means, and see if it means that we're near something that's more gold dominant, or see if it's something that's copper dominant that obviously would have value, and we would figure out what to do with that going forward with it, whether it's a joint venture with somebody else or a spin-off or something, but it's not our focus. So we need to see gold dominant or gold only mineralization.
Well, that's great, because that brings me to my next question. So Dominic asks, you were talking about M&A last year, but we didn't hear anything about it today. Is that still a part of your strategy?
Yeah, it is, and it's late in the game as we create value and leverage with our share price. One of the issues that we've had, that's no secret to anybody in any business, is COVID, and we can't do property visits the way we want to. We can't sit in boardrooms with other companies and go through their data. It's just not doable at the moment. So certainly it's slowed down, but it is definitely part of our DNA is to do accretive deals in the M&A space when and if they provide it. We won't do a deal just to do a deal. It has to be the right deal that's accretive to our shareholders, and things have slowed down because of COVID.
Okay. What do you think could be the economics for Goldboro as far as costs are concerned compared to Atlantic Gold?
Well, we can't comment on that. There are very strict stipulations about commenting on things. That's why we want to do a PEA, so we can show a preliminary economic assessment, so that we can show how robust the project could be. Until then, we can't speak about it. But I think, one could look at it and say, it's an open pit that has 2.86 grams per ton undiluted, and what that might turn out to be. And I think what you'll see is it's probably one of the higher, if not the highest grade open pits that'll be developed in Atlantic Canada, and therefore should have a pretty good cost scenario. But until the work's done, we can't comment on that.
Okay, fair enough. Who buys your production, your gold production, and how are the prices determined? Do you lock in the prices with futures?
Rob?
Yeah, we send all our gold out the door that we produce to the Royal Canadian Mint, and they'll take it to a final bullion form, and we sell through gold traders, usually with a group such as Oramet. Some people might be aware of them. So for the most part, I mean, we sell at spot. We don't have a hedge program per se at this point. That being said, we do sometimes, we will look out 4 weeks, 6 weeks, and if we're seeing a nice gold price, we'll take some of that price risk off, but nothing really further than that at this point.
Okay. Some questions about the warrants. Are the 5 8.6 warrants in the money?
Very much so, yes.
Okay.
Yeah, they're in the money and they expire, I believe, within the next 6 months.
Q3, yeah. So that's, there's some good in-bill financing there. Yeah.
Okay, excellent. When and how can you increase production?
Well, when we went through on the timeline, obviously to get this to construction ready is another is 18 months beyond the end of this year. So it's into 2023, and then it's a 18-month to 24-month build. That's going to significantly increase our production by approximately 100,000 ounces a year. As far as at site in Point Rousse, it's always been smaller pits that we keep discovering, and it's always been where basically the maximum you can do out of those is the maximum throughput through our mill. So it's not about increasing throughput to increase our gold production, it's about increasing grade. And that's why we're exploring very aggressively in Tilt Cove, because right now we're making about $20 million a year EBITDA project level at 1.5 grams. Imagine finding something 5 to 10 grams at Point Rousse and shipping that over. And when we do find something there, we don't have to find something of size large enough to justify its own infrastructure, because we have the infrastructure. And we don't need to find something, we don't need to permit tailings ponds in the area or anything like that, because we'll be delivering it to our fully permitted tailings. So, we could move quite quickly on discovery at Tilt Cove, but Mother Nature is fickle, and we'll find it when we find it. But we're aggressive. We know we're almost certain there's something there. Hopefully we find it.
Well, a couple of questions. You touched on some points. Are you in the process of getting the permits at Goldboro?
Yeah, we've been working on it for almost 2 years now, and we continue working on it. And we've done a lot of studies, which include fish and wildlife, flora, fauna, sound, dust, everything you can think of. Alternative assessment studies, so that we're trying not to put any infrastructure on top of where there's waters frequented by fish or any other issues. And we continue to work on that, and it's a process. And like I said, we'll be putting in our document that says how we want to build this and the infrastructure and everything else to the environmental authorities at the end of this year. And then it's an 18-month process for feedback and open houses and discussions and answering questions. So we're well on it. It's not something you can fast track. It's something you have to go through.
Would you mill on site at Goldboro, or would you ship it out?
It's absolutely going to be on-site infrastructure. This is a large mine now. When we first acquired it, and it was 800,000 ounces, there was some discussion about possibly barging it to Newfoundland, but that went away very quickly after our first drill program, and we realized how big it was and that it justifies its own infrastructure.
Okay, and what is the current infrastructure that's on site right now?
So we have an office building. There's past production from the late 1800s, and then there's some underground development that they did, I believe, in the 90s, looking at it again. So there's roads to the area, there's power to very close nearby, and that's it. So, it would be building a camp for construction and a camp for operation. It would be building around a 4,000 ton per day mill processing plant and associated tailings and waste infrastructure.
Okay. Are you expecting, this is a very speculative question to ask you, some majors to be looking at buying Goldboro after the PEA is published?
I number one, can't answer that obviously, but I can say that we have said that this is the largest single gold deposit in Nova Scotia. It's the second largest deposit in the East Coast. It is probably, it's the highest grade that I know of. So I think that it's something that it's like a moose crossing the road. It would be hard not to see it.
Yeah. Perfect. Let's see here. Oh, so do you own the properties outright, or are there any royalties on the properties? Sorry.
If we're talking Nova Scotia, there's no royalty on that property. There are associated royalties with some of the properties in Newfoundland, but they're minor. They're not material. But Nova Scotia, yeah, it's no royalties associated with that.
Excellent.
100% outright ownership.
Great. Paul, you've joined us. Do you have a couple of questions?
You're covered by a couple of analysts. What are their price targets? Or have they updated their price targets since you've come back with the Goldboro results?
They have updated their price targets. They both went significantly up. One target is $1.50, the other target's $2. There's only 2 analysts covering us now, but we expect there to be more. And you know, again, COVID slowed down. We had quite a few analysts on site that were going to write us up and cover us, but needed a second visit. That hasn't been able to happen yet. But we expect more as we grow, and you know, the prices are well above our current price.
Okay. Now, Nova Scotia is pretty mining friendly, the government, right? Are they helping you in any way? Are there any grants that they've put forward to you?
We've received some grants in the past, I believe, for a bit of drilling, exploratory drilling. But the help that we get from the Nova Scotia government is basically, you know, communication back and forth about our permitting process and being guided in the right direction to do that. Because again, it's a process. It's not, a lot of people get worried about the term permitting, and you can permit anything doing it the right way. You can't get very far if you try and cut corners. So it's a process. We don't have any red flags raised after 2 years of going through it. We will get it done, and it will take time. And it's going to be another 2 years at least before we get final permits.
And one last question for you. Where's your focus going to be over the next couple of months?
Oh, definitely getting the PEA out for Goldboro. So, you know, we're always, we have a great team at Point Roost that focuses on efficiencies of mining and getting our you know, meeting our guidance, cost guidance and revenue guidance. While we work hard, at the Goldboro team works hard on getting some numbers around this deposit to show people how, you know, what it really is worth, so that we can talk about it. So we're doing that as fast as we can. And I can tell you that the PEA will have a lot of information in it that is feasibility level. So it'll be a pretty good PEA. It won't be one of these reach into the sky for numbers. It'll be pretty accurate.
Excellent. One quick last question. Any silver anywhere on any of your properties, like gold related? No?
Very minor in our production in Newfoundland. It's very minor. And we don't see any in Goldboro. You know, just traces.
Well, gentlemen, thank you so much. This has been a great update. This story is getting better as each time we talk to you or each time we see you. If anybody out there, any further questions, please submit them to Sophie or myself, and we can redirect them to Kevin and to Rob, and I'm sure they'd gladly answer them. Again, thanks very much. Appreciate it. And everyone have a good rest of the day. Thank you.
Paul and Sophie, thank you for your time.
Thank you.
Thanks very much.
Bye.
Appreciate it.